So Nick, you, like I said at the top, you go through the evolution of money, the history of money, which is fascinating. And anyone who's gone through Neil Ferguson's tome will understand that there's a lot there. Obviously, it's a fundamental technology of human civilization, and you have condensed it down into a much more approachable, 50 pages or so, which I definitely appreciate, and I think you did a fantastic job. Would you mind summarizing I want to get into talking about Venice and Antwerp and kind of focusing on those and digging a little deeper into those stories. But could you kind of bring us up to that point, up to the 12th, 13th century on the history of money with a little summary?
Yeah, so the history of money can go all the way back to the history of human anthropology. Sapiens talks a little bit about this stuff, and Niall Ferguson as well in his book, The Ascent of Money. But what I wanted to do is start at the gold coin. The reason I chose that is because I think that why humans chose gold is a very interesting anthropological study and can really go back many, many millennia. But I didn't want to start all the way back there. I wanted to start with once humans chose gold and silver as the best forms of money and the consensus forms of money really around the world, how did a monetary system develop after that? And really it got kickstarted with coins and taking this idea of using precious metal and then standardizing its weight and measure so it could be used a lot quicker than if we were just going to trade gold necklaces or gold nuggets that we would have to weigh and measure the purity every single time we transacted. So coins really simplified that a lot. And we saw the first coins in around the 6th, 7th century BC. And then the first coin that I think really kickstarts the monetary system aspect of it is the gold florin issued by Florence in the 13th century. And that's the first coin that we really focus on.
Yeah. So what made the florin special or different from, we had a couple thousand years of coinage running up to then. What changed the game?
It's something that's familiar to Bitcoiners. It's the fact that it wasn't devalued at all for over 300 years. And that was remarkable and unprecedented. And it really allowed people around Europe to gravitate around the florin as an accounting denomination, as a way to store value long-term, and as a way to also, more importantly, as a way to build a layer of promises. So a second layer of money based off of this very consistent coin of the gold florin.
I think it's interesting because with Bitcoin, we basically get that for free, right? We have the ability to assay both not just in each individual coin, which is very easy. Your full node validates each coin that you receive, but we also have the ability to determine the entire world supply of Bitcoin, making sure that there's no new Bitcoins being produced. So it's very interesting to see those parallels between Bitcoin and physical coins that were considered very good, and now we have this even bigger leap in technology, allowing us to have much more confidence in the purity and quantity of those coins.
Yeah, and there's no doubt, I think through my research and I think most Bitcoiners as well, that Satoshis Design was very specific and it was as intended. He talked about gold, he talked about gold mining, he had an acute awareness of the monetary system, specifically credit-based monetary systems, fiat currencies, which means currencies that aren't backed by anything other than decree or promises. And in his early literature, he talked about all these things. And so it is appropriate for us to draw parallels to thousands of years of gold history in order to describe Bitcoin and its role in the future of money.
That's a good point there that Yan raises, right? The ability to assay the money itself and the veracity of it, the hardness of it, the truth of the ledger, and in terms of like relating it back to gold. Gold itself is and has been throughout history very difficult to assay. So, what are some of the ways, Nick, that the people would try to establish the like I guess quality of a gold coin in the past? What would people have to go through?
Yeah, I mean, you have to. It comes down to either you trust that it is what it is, and you transact quickly, or you don't trust and you slow down the entire concept of money velocity or economic activity. And so people basically were forced to trust this new type of gold, and they used their belief in the face on the coin, the ruler, the government, that these coins were of a certain purity. And once enough people believed that the coins were legitimate and they had their purity, then it allowed for economic activity to increase. But really, when it comes down to it, if we want to draw the parallel to Bitcoin, people weren't verifying every transaction. They weren't weighing and testing the purity of every gold coin or silver coin that they transacted with. And because it's burdensome, it takes time, it takes money, and it's just not realistic. But in Bitcoin, we have this ability to do that instantly, and that's part of the revolution.
Yeah, I think it's super interesting to talk about. A lot of people believe that that money is not possible without government, and they will even say things like, even if the gold wasn't chosen freely, it was only when governments were like stamping their faces on it to create that guarantee of purity and all that people were able to use that as money. Where with Bitcoin, we actually have kind of a revolution in that. Whether or not it's true that governments were a prerequisite for money, we don't have to make that determination, because Bitcoin actually makes that possible without governments, because we can, each one of us, say, the quantity and the quality of the coin without any third party. That's the whole point, right? And I think that makes a really interesting, it is a parallel to the purity of the coin idea that you just talked about, Nick. But I do think it also creates this big leap in our understanding of money, because we can now say, for the first time, we can believe in the purity of something, just not through belief, but through verification.
And on the first layer, more specifically, like on the first layer, not just because, and if you take a stable coin, for example, even if it's on a ledger and we can verify that we have that stable coin, we still are disconnected from the money, because of a balance sheet that exists between us, and probably at least one balance sheet exists between us and the money itself. And so with Bitcoin, we leapfrog over all of those balance sheet relationships, and that is extremely powerful. And the point of the book was to explain that Bitcoin is a new first layer money, not just a new type of money or a new technology. It's a new first layer money that people can have access to anywhere in the world, giving them really an unprecedented monetary authority. And it's really exciting. I'm so excited for the book to come out, just days away now.
So can we even assay the money supply of like the current US dollar money supply? Is it just like, do we round it off at some point? Do we know an exact number, Nick, of the number of dollars that are in circulation? Let's say M1 or M2.
Sure, it's a great point. So I think that M1 and M2 are completely obsolete. It's part of the reason I introduced this layered framework. So we can measure different layers, the quantity of money on different layers, with different degrees of accuracy. And I guess accuracy is the best word. On the first layer in the US dollar pyramid, in my book, I have US treasuries alone by themselves. And so we can measure the quantity of US treasuries in the system. It's about $30 trillion today. On the second layer of money, it's starting to get a little bit more difficult, because not only does the Fed issue reserves to the banking system and cash, both of which we can measure, they also issue foreign exchange swap lines to other central banks, and how those central banks use that money to propagate it through their own domestic banking systems is also very hard to measure, by the Fed. And then on the third layer of money, which is bank deposits here in the United States, that's also measurable. But once you start to get into lower layers of money, it becomes very, very difficult.
You also have dollar creation through the creation of debt, right? That may be completely outside of the purview of the Fed. The euro dollar system, where people are creating dollar denominated debt in other countries, also creates money in a sense that we can really not track at all.
It's not in a sense, it is money that they are creating. Yes. And yes, so when I say bank deposits are created when loans are issued. And that's the double entry accounting. It's when a loan is issued, it becomes an asset on a bank's balance sheet, and it issues a deposit, which becomes their liability. It becomes your money, it becomes your asset, but it's their liability. And so layers also, is a way to describe the balance sheet relationship.
So that's double entry accounting system was really created in Venice around the time that the florin was established. And so let's go back to Venice in the 13th century. Can you talk about the advent of, maybe not the exact advent, right, but the popularization, the spread of double entry bookkeeping accounting?
Right. So I wouldn't say it was created in Venice, but the practices that were brought to Europe from the Middle East and India over time were formalized in Venice with the double entry accounting system. And what that did is it really allowed this banker class to develop and then start issuing promises with each other and loans and doing this to make money, of course. That was their goal. And they all did so on a level playing field, meaning they were all using the same accounting rules. And they were all able to compete with each other following these same mathematical rules. And I do believe that double entry accounting and its formalization at that time in Venice were key to progressing money away from just a metal and really toward a system, which we see today. We're not using coins to transact with each other. We use a monetary system. So double entry accounting was a huge foundation in that development.
Was this also the point where second layer monies were really used more widely?
Exactly. So because the florin was used as this kind of ultimate settlement, it allowed, I wouldn't say that the relationship is direct between the florin and this boom of second layer money, but it did contribute to it. People believed that if they had a bill of exchange that promised them florins in the future, that bill of exchange had value, that that promise that was made that they held did have value. And those promises that held value, they gained popularity. They gained a rhythm, actually, if you want to use that word, because the bills of exchange were designed to bridge maturity. They were designed to bridge debts between these seasonal fairs across Europe. And so, for the next 3 months, I owe you this, and for the next 3 months, you owe me that. And that relationship of kind of 3-month maturities stayed for a couple centuries. But then in Antwerp, finally in the 16th century, we found all those promises and pieces of paper leaving the quarterly world and coming into a live market. And that's where the money market was born in Antwerp in 1531.
Definitely want to get into that because it's a really interesting story that you lay out in the book. It was holding my attention because I hadn't really heard the story, so definitely had me wrapped. Yan, Bitcoin is often referred to as a triple entry accounting system, maybe the first triple entry accounting system. Can you talk about why we say that the Bitcoin might have added an entry to the accounting system?
Well, with double entry accounting, we have to really just trust the two copies of the ledger, right? We have like the liabilities and the assets. and we have that written in each person's balance sheet. But now we also have this like third party, totally incorruptible ledger, right? Where this thing is stamped into. So if I own one BTC, if I've received one BTC from Nik, then that receipt is stamped into the blockchain. That's neither his entry nor my entry. It's completely impartial entity, if you will, that is recording the ownership of that Bitcoin. It's incorruptible, which is actually for the first time, in history, do we have this idea that we can store an incorruptible record of something, which is then buried under what we call proof of work, right? With Bitcoin mining, with people expending lots and lots of energy in order to secure that record. So I know that Bitcoin is mine, and Nik knows that Bitcoin is mine, and it is what it is. It can't be changed. I think it's a really important innovation, not just for accounting, but just the idea of property rights, because now, it can't be taken away from me. I'm the only one that has the keys to that, to spend that coin in the future, which is a really, really big innovation. And I think it's going to propel the use of money in ways that we haven't really thought about yet, because, it opens up all these doors for us. It's not just that I could have keys to that. It could be a multi-signature address where I'm sharing the keys with some other people. It could be a corporate entity where the keys are shared by 7 of 9 holders or something like that. So I think this is a very interesting system that we've just discovered, and we're just starting to understand the possibility of it. And with more things coming down the line, like Taproot, which would potentially open us up to doing more complex, more complex scripts and things like that to lock up our coins, we really are going to get into a world where it's not just a ledger. It's much more than that. It really opens up the opportunities for us to create contracts with each other that we haven't even explored.
Nik, what is the impact of this idea of triple entry accounting to you?
It's formative. It means that the relationship between balance sheets is really replaced by a shared record, like Yan was saying. It's everybody has the record. That's the third entry. I have it because I have a node. You have it because you have a node. But then everybody else has it because they also have nodes, and we share a common history, backwards looking 10 to 20 minutes, and that is the triple entry, and it's very powerful.
A trustless double entry accounting system, another innovation. Okay, so let's dive back into history. The 16th century in Antwerp, in the Netherlands, and this was, like you were starting to get into, where the first money market developed for second layer money. So second layer money being traded, and this had a big impact on the velocity of money and the ability for markets to really grow. And so I'd love to hear some color on this story, Nik.
Yes, so it's actually before the money market arrived in the Netherlands. Antwerp was the center of international trade, and so that means all the commodities were traded through Antwerp, and because of that, the bankers followed the traders and the merchants around and helped them bridge debts and transfer money around the continent. And those forms of banker promises that were made during that time found their way onto an exchange where the pieces of paper themselves began to be traded. And that's where the idea of money in terms of promises having time value. And so the time value of money, really, we saw it for the first time on a daily basis in Antwerp. You could measure the time value of money by measuring an interest rate over a year. If someone is paying debt and they, promise to pay it back in 12 months. But if you have 3 months promises that are changing hands every day, you actually, the time value of money was born in that Antwerp bourse. And that's why I had to include it in the story of layered money, because when money got a time value, we knew that this second layer money was an asset class of itself. And people were going to trade it and try to make money off of it and arbitrage it. And so the demand for it was real, and that would continue on.
So can you talk a little bit more about the time value of money? You wrote this, the first I think maybe way people were introduced in Bitcoin world to your work was, I think it was 2018, maybe 2017.
2018, yeah.
2018, yeah, right around the launch of mainnet Lightning Network. You wrote about the Lightning Network as a layer 2 money on top of Bitcoin's base money, establishing a time value for Bitcoin. So can you talk about the importance of that for Bitcoin in particular? You've talked about it as as it is, relates to money. What will that do for Bitcoin in particular, though?
So Bitcoin is unique in that it doesn't need time value or the Lightning Network to be an important technology. Bitcoin as a neutral money is a once in a millennia, several millennia type of technology, and it's important because of that by itself. However, the Lightning Network allows Bitcoin to be used in a much more dynamic way than without it. So in the Lightning Network, there is a secondary network of Bitcoiners themselves that have agreed with these contracts, these smart contracts, to transact with each other instantly, because they all agreed that they were going to bring real Bitcoin into the system and use these standardized contracts in the Lightning Network. And anybody that dedicates Bitcoin to this network can earn Bitcoin by helping other people transact. And that's, goes into payment channels and liquidity. But really the point is that if you can dedicate Bitcoin to the Lightning Network, earn an income denominated in BTC, but you didn't have to actually fork over that Bitcoin at any point. It was just locked in these smart contracts that you could close at any time and call the funds back to yourself. We have, for the first time ever in monetary history, the ability to earn income without ever having to relinquish the capital required. And that is something that's very exciting and new in monetary history. And the interest rate that we can derive from that type of routing activity, it's my belief, can be used as a reference rate for Bitcoin when we start to see capital markets really take off and people borrowing in Bitcoin terms. They'll always have to pay a premium to Lightning Network reference rate, in my opinion. Nobody will ever lend you money and at a lower interest rate than what they can earn in a Lightning node, for example. That's my opinion. I think that that's far off, maybe a couple of years away until we can actually see how these interest rates relate to each other. But it's part of my thesis and prediction, and part of it's really why I started writing about Bitcoin, was to discuss this idea publicly.
Yeah, I mean, it's a big deal, and I agree with you that we're seeing it happen now, and we'll see it play out over the next few years. Lightning Network is still only a few years old at this point. Yan, can you talk about this idea of Lightning Network producing a yield curve, creating a yield curve through returns? I know that we're seeing some development on that front now. It's making it a lot easier to earn yield on money that you have locked up on, or freed up, as you might say, on the Lightning Network with Lightning Pool, for instance. Do you want to talk a little bit about the developments on that front on the Lightning Network?
I'll probably have to defer to Nik primarily on that, as I haven't been following it as closely as I should be. But I will comment on something that I saw Alex Bosworth tweet a few weeks ago, I think it was, where he was showing his stats around how many Lightning payments he had routed from over the last couple of years, and basically like how many payments he had routed and how much he had earned on routing them. And there was essentially an exponential looking growth to that, which is as would be expected. I think Lightning Network is super young right now. There's a lot of impatience, especially in the altcoin community, around Lightning isn't real, it's never going to work, but it's been working and it's been growing. And I think what's actually happening is it's just so early in Bitcoin that there's just not enough Bitcoin circulated yet, not enough Bitcoin locked into the Lightning Network yet. As that grows, we are going to see an exponential increase in the ability to route payments and to earn yield from that, which I think is very interesting, as Nik is pointing out, because it is essentially a risk-free, or as close to risk-free as you can get with lending your Bitcoin. And I think there's two forces there, where you have you can lend your Bitcoin to a third party completely custodially, right? Like I can just literally send my Bitcoin to somebody and with no promise of ever seeing it back, other than maybe like a legal piece of paper. Or I can do something like an unchained capital thing where I lock it up and it's on chain and I can see it, and it's a little bit more transparent. Or I have that ability to lend it to the Lightning Network for essentially a risk-free rate where I can always call it back. Modulo, like if the Lightning Network has bugs, then there might be a problem there. But generally speaking, over time, we do expect that to be a risk-free rate. And so, yeah, I think it's a very exciting development. I think with Bitcoin, one thing that I'm not really, maybe don't have a clear understanding on is what it's going to look like because Bitcoin's total supply is fixed. So at some future point where all the supply is distributed, if somebody's earning yield, that necessarily means that somebody else has paid them that money. It hasn't come from new issuance or anything else. So it'll be interesting to see how those fee markets and routing markets develop given that information. But I do think it's a very, like Nik said, why would I ever lend to somebody when I can just earn X% risk-free? I would have to ask for a lot more in yield from somebody else if that's the case. So I think we are going to see that developing. I think it's very, very early. I feel like I'm the conservative one. I'm always like, it's a generation away before anybody uses this stuff. But if it's in the next 2 to 5 years, I think it would be very exciting as well.
Yeah, and also from my perspective, I'm geeking out about the fact that there will be a rate and that we'll be able to measure the difference. People at the beginning would the most frequent question I would get is, how much do you think the interest rate will be, or how much do you think that we can earn? And that part is less interesting to me. It's the fact that you can, and that you do it only with smart contracts and without actually having to relinquish the Bitcoin, and that there is income and there is demand for channel liquidity. I saw that myself working at OpenNode when I was doing research with those guys. I saw firsthand how they manage a node, and it is a skill set. First of all, it definitely takes expertise, the way that those guys run the node. It takes iteration. So, they're always doing A/B testing, what works for routing fees and what doesn't. And if you want, if you ever want to understand more on what goes into, a node, talk to the businesses that are building Lightning Network companies and themselves are the biggest nodes in the network. And we can see that, with OpenNode and Fold and these guys, they are experts in the functioning of the Lightning Network itself. And so there's a lot happening regardless really of how much they can earn by routing fees.
Sorry, go ahead, Yan.
I was going to just say, I think it's also very early in the user experience of Lightning node operation, where you do have to have a lot of expertise. You have to understand the network. You have to understand how to manage your liquidity. And I think we're already seeing developments on this front from companies that are developing products to essentially help you manage that and have it more automatic. And I think as that gets out, to the mainstream, we're going to be able to all run routing nodes and maybe earn different amounts of yield depending on how savvy we are. But I do expect with more technology and more, maybe there's machine learning or something like that that helps you optimize these things. And over time, we'll have more people entering to that space, more businesses doing it. Maybe it'll end up being that if you're just a point of sale merchant and you're running a Lightning node to accept payments for your business, that you're also a routing node and you're earning yield on that, which would be very cool. But I do think we're just some way away from that just because of the technology that's required to develop all of that.
And part of the challenge for me is that I don't have a programming expertise at all. So when I read, the papers from Lightning Labs, a lot of it still goes over my head until time goes by and people like Alex Bosworth start tweeting about it. And, that's how we can learn, these things. And especially me with a financial background, what it means for liquidity and capital markets and interest rates is all very exciting, but we have to wait for the programmers and for the products to be tested. And once they're tested and they work, then people actually start talking about them in more of a layman's term that I can understand.
Yeah, and by the way, I found that tweet. So this is just interesting statistics. So he said in 2018, he routed 5,000 payments, earned $20. In 2019, it was 15,000 payments, so about 3 times as much, but he earned $200, so much bigger yield. And in 2020, he routed 70,000 payments, earned $2,500. So we could definitely see that yield is increasing. I think, I don't know if I can do the math in my head on 70,000 divided by 2,500.
No, it's actually you can't measure it because it's the number of transactions. It's
Right.
it comes down to how much liquidity that he dedicated to the network. But the bottom line is that the pie is getting bigger.
Yep.
As more people start using it.
Yeah. Do you have you achieved that kind of high level layman's understanding of Lightning Pool yet? It's a few months old. Lightning Labs announced it as a way to more easily generate liquidity by basically lending out your Bitcoin on the Lightning Network to others who need to open channels.
Yeah, I actually understood it when I spoke with Ryan Gentry at Lightning Labs, and I had a chat with him, and he explained it to me as, I really like this, as like a capital lease. And so, I think when I think of capital lease, I think of John Deere and Caterpillar, and that's the analogy. So when they lease you the tractor, you're using the tractor for your utility. And so the payment channel, I think of it like as a tractor, maybe. And that doesn't fit in the financial world yet, but I'll have to come up with a better analogy. But yeah, I think of it as a capital lease. And so the channel that itself is a commodity, is a financial commodity, like a tractor that can earn you something from it. And the channels themselves are liquidity instruments, to my understanding. But it's gonna, again, like, I'm not able to understand it yet. I have to see people use it, and then I can come up with analogies that make it more translatable into financial jargon.
Yeah, and I think it's just early with the user experience again, because right now, even to participate in this, you need to run like a command line client. Most people are not going to be savvy enough to do that. I do expect over time they're going to create products around this, productize it, make it really easy to use. And we will see more businesses enter into the space and actually become operators of nodes and lending to this pool concept. I think it's just early, but we're going to see it.
And I will also say that my confidence in the people that are designing these things is so sky high that I don't even worry that much. I know that as time passes, they will be creating amazing things that are then translated into layman terms for people like me. And I know this just from like what Lightning Labs has done over the last 2 years. You start with a few tweets by Alex Bosworth about routing payments, and we can geek out about it from an interest rate perspective and capital markets perspective. And then a year later, they are launching a capital lease platform with payment channels that you can earn Bitcoin, and it's like a plug and play solution to people that have the technical expertise. It's mind blowing. It's going so fast. I trust that they're building it for us, and it's just empirical. We can look and see that they are. So I'm excited to see what the Lightning Labs team has in store for us, and every other company out there that is employing Bitcoin Lightning Network developers and designers for our user experience.
This holiday season, give the gift of Bitcoin to your loved ones. Swan delivers your Bitcoin gift along with our world-class education and client service. Create a Bitcoin gift and wrap it with a custom message for your family and friends. Dash away with your gift. Your recipient will receive an email right away, that easy. Give the gift of generational wealth. Give Bitcoin.